Hi, Frank. How are you?
Hey Matilda, I'm good. How are you doing?
Very
Long
well.
time, long time no see.
Absolutely. Good to see you today. Thank you so
Good to
much for
see you.
taking the time to speak with me and the audience.
Pleasure, 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 pleasure.
So, Frank, before we dive into market trends, could you please tell me and tell us a little bit about yourself?
I run a macro trading strategy for a family office backed hedge fund. It's a strategy that's kind of anchored on commodities, mostly crude oil. I mean, we do a bit of gold as well. We have a few natural gas traders. But a strategy that I look at is crude oil, commodities, but also kind of thinking about cross asset um, correlations, equities, a bit of interest rates, a bit of FX, but very much anchored on commodities and crude. So you can think of me as a macro oil trader. That's kind of my lane.
Thank you so much. So, Frank, a lot is happening at the moment. How does that impact the business and your business in particular and your team?
Obviously, if you want to talk specifically about what's going on in Iran, I think that's um, clearly topical. And I think the long story short there really is that now the regime has been attacked to its core, right? I mean, I'm not sure if the plan initially was to come in and take out the Ayatollah, or it just kind of happened accidentally, throughout the military operations. But we're here now, and the Strait of Hormuz, which has been kind of the tail risk for crude oil markets, everybody's feared, this to ever happen. Now we're here, so the tail risk has manifested itself. So the question now is, how do we go from here? And again, it goes back now to policy risk. Once the tail risk actually gets realized, it's policy response now that you have to be able to model and understand, what's going to happen with policy, not just from the U.S. side, even from the Iranian. Are they looking for an off ramp, or are they just going sort of, back against the wall, kamikaze style, right? So it's all back to policy risk again, and that's the environment we're trying to navigate right now.
Super interesting. Thank you very much. What about opportunities? Do you see any opportunities in the markets at the moment?
Yeah, I think for crude. It's unfortunately, I think there could be a bit more upside here before things calm down because there is a risk of whether this conflict is going to last 2 weeks or a couple of months, right? I mean, and now there's still a bit of a buffer in the crude system with stockpiles, and people have some import cover to manage the situation in Hormuz. But if we this conflict continues to linger, let's say another 3 to 4 weeks, then I think it's going to be double digit oil very, very rapidly. So I think there is some opportunity to play that upside in the short term. Um, and volatility is really, really rich at the moment, right? So I think it's not buying a call option right now is a bit expensive. Maybe there's ways to play some call spreads. I think $100 oil. Maybe we overshoot that a little bit. So maybe like, call spreads between 100 and 110, $115, maybe 120. I think those plays could be interesting. That's in the shorter term, but I think ultimately, no matter how this goes, it's these spikes are never really sustained in the long haul, right? Even when you go back to Russia, Ukraine, it's funny because the timing seems to be lining up almost perfectly. Russia was got into Ukraine on February 24th, 2022, and uh, the U.S. bombing into Iran was February 28th. And not to say history repeats itself, but you kind of use history as a guide to try to kind of model what could happen in this particular instance. But I think we could be in a bit of a volatility sort of vortex for a couple of months, right? But I think once we get through it, eventually, um, it's just inevitable. At some point, things will calm down. I'm not saying the war would be over and there wouldn't be any remnants of, Iranian attacks here or there, but once the major tail risk is contained, I think we're going to be going back to trading the fundamentals. So I think in the back end of the year, this could present actually a good opportunity to try and short the market back down to maybe, the mid 60s on Brent or, 70, $65. So the higher we rally, the more opportunity to potentially put a good short position on the market once things starts to stabilize. But I think in the shorter term, in the front end of the curve, you could play maybe a call spread, with the idea that, we haven't really reached peak volatility with this because we're just 4 days in, right? It feels like it's a month. It's been a month. It's only 4 days, so it's still very early days. So there could be some upside in the shorter term, but in the medium term, in the next couple of weeks and months, play the fade. So those are the opportunities that I'm seeing here for oil specifically. I mean, if you look at other pockets of the commodity sector, I think gold also is potentially the thesis for gold hasn't changed. I think gold is going to continue to grind higher. This is another, geopolitical crisis that's even giving more tailwind to gold, right? I mean, it's if central banks, who have been the major buyer of gold here structurally, if they were ever bullish, this is going to make them even more bullish, because things are just showing that the world is really going through a transition and geopolitical risk is just are just going to be here to stay with us for a while. So the bullish thesis for gold is there. Any dips that we're seeing in gold right now could be good buying opportunities because I don't think that the thesis has changed fundamentally. I think it's more about some technicals that are taking place, some deleveraging, notably from Asia investors. We're seeing some of the stock markets in Asia coming off just recently. Like the Korean stock market has been doing tremendously well. It's coming off. I think today is having one of its worst days ever. I think it's down close to 13% last time I checked earlier this morning, which is probably one of its worst days ever. And it's just because people are deleveraging in response to what's going on in Iran. And when you see that kind of deleveraging, because retail investors in Asia tend to be huge buyers of gold, typically they'll tend to sell winning positions to cover their margin calls. So the low lying fruit really to achieve this is to sell these long gold positions just to get some cash back to meet the margin calls. But it doesn't change the thesis for gold at all. So for someone who's buying gold, based on a fundamental backdrop, this could be a good opportunity to try to step in. Obviously, things could always go a little lower, but I think the bullish trajectory for gold, it really hasn't changed. And any dips that we're seeing, to me, present good opportunities to go along to add to the long side.
Thank you very much. Thank you very much for your insights.
Yeah,
Seeing you again. And yeah, thanks again.
you got it. Yeah, yeah. Speak soon.
Bye bye.
Bye.